Yes, we've been waiting for a deal for pathology provider Sonic for a while now, and they did not disappoint. Really a transformative deal, I would say. It's the first time in its 30-year history that they inked a sizable deal. It's a 750 million Australian deal. They took out a US-based anatomical pathology provider called Aurora Diagnostics. What's anatomical pathology? It's a specialty part of pathology that actually deals with cells and tissues, as opposed to the more commonly what we would know as clinical pathology, which deals with analysis in blood and urine, and we're not all used to those. The deal is funded by up to $700 million equity raise that is comprised of a $600 million private placement. That placement's done at $19.50. That's an 8.8% discount to the last trading price. So it looks quite favorable given the market conditions, obviously. And there's up to $100 million SPP that will run from next Tuesday until the 4th of February. Now that price point is yet to be set, but it's going to be no higher than the private placement price at $19.50. You can refer to our note for the indicative timetable of that SPP. Now for us, the deal looks quite interesting. It looks good, actually. Both a strategic and financial merit. First, I would say, Sonic is a very easy company for us. I mean, it's one of the few, actually. It's all about scale and leverage, and this is all about scale. So Aurora, what it does give it gives it really an expansive footprint in the US market. It uplifts their lab count by 65%. It covers now 70% of the entire US, increases its pathology numbers by up to 30%. There's about 1,000 strong pathologists, and its customer base up 23,000 prescribing physicians or referring physicians, and it inks 100 more hospital contracts. So really good to see them there. Second is both EPS and ROIC accretive. That's really translating into a 7% uplift in the top line, falls down to the bottom at 3%. That's even with the cap raise, and you have extra dilution, obviously, with the extra shares coming on board. But that's 3%. Definitely diversifies its revenue stream. Now, about 60% of its overall business is offshore, moving away from the more volatile domestic market here. And as I said, it was moving into more anatomical pathology, which is a higher margin business. It's actually less capital intensive, and it's lower regulatory risk than the clinical pathology department that I just talked about as well. And lastly, I would say, Aurora is coming out of the hands of private equity, and I don't have to tell you, we all know the caveats that come with that. And they did pay a 9.2 EV to EBITDA multiple, which is at the higher part of its normally 7 to 9% historic range. But having said that, this is a management team that have done a lot of deals, a lot of transactions, mostly bolt-ons, mostly smaller deals, but they are very, very confident that their due diligence was complete, and then they actually bought what they said they bought. So these assets were not underinvested in, and they're not carrying any debt on the balance sheet for this acquisition as well. And regarding the multiple, I would say the 9.2 times, that excludes revenue synergies, which are going to come from cross-selling, they believe, and I can see it in the model. You have cross-selling synergies between the anatomical and clinical pathology. That's not included. And I would also say, that it's also trading that multiple below a Sonic's multiple with 11.5%, and it's below the US peers that are trading at 9.5 to 10 times. So that multiple is definitely not egregious here. So overall, looks like a very interesting, good deal. I'd classify it as, this company's putting up a 3-year annual growth rate in the earnings of mid to high single digits. It's yielding 4%, which looks interesting, 30% fully franked, and it's trading at 16.5 times forward earnings. Now, in relation to its long-term historical average, that's about on par. But when I look at the SPP, I think, if you can get it below or at the 1950 price, that equates to a 15.1 forward multiple. That's 7% below its mean multiples. So I definitely think investors that are currently in the name should take up their current allotment. It's up to $15,000. And for those of you looking possibly to get into the name, I think it's an opportune time, especially today when it reopens, because there's always that would-be hedge fund going to dust it out here and ink their gain and push that stock possibly down lower today. So we're looking to pick some more up of Sonic. So continue to like the name.